Welcome back to another episode where we dissect actionable trading strategies in a way that is not only practical but also immersive. Today, we're going to delve into a cornerstone of trading mastery, price action. Now, I know that phrase gets thrown around a lot, but let me be clear, price action is not just a fancy term, it's the art and science of reading the market's heartbeat. It's understanding how traders behave, what drives their decisions, and how to anticipate moves before they happen. Think of it as learning a language. The market speaks through its price movements, and price action is your translator. So, what exactly is price action trading? At its core, it's a methodology that relies solely on historical and current price data to make trading decisions. Unlike strategies that depend heavily on indicators or automated signals, price action strips everything down to the essentials, the market itself. Every candle, bar, and wick tells a story about sentiment, momentum, and intention. This methodology allows you to cut through the noise and get directly to the signals that matter. Let's start with market sentiment. Price action reflects the collective psychology of market participants. When you watch price movements over time, you can gauge whether bulls or bears are in control, where indecision lies, and where momentum is building. For instance, an extended downtrend punctuated by a strong reversal candle near a historical support level signals that buyers may be stepping in, an early hint that the market could be turning. Support and resistance levels are your roadmap. Support is the price area where buyers typically overwhelm sellers, preventing further declines. Resistance is where sellers dominate, preventing further advances. Identifying these levels is crucial because they often coincide with high probability entry and exit points. But here's where price action gets interesting: these levels are not static. They evolve as the market changes. A previous support level can become future resistance, and vice versa. Learning to read this dynamic behavior is key. Candlestick patterns are the vocabulary of price action. Take the doji, a candle where the open and close are nearly identical. It represents indecision, buyers and sellers are at a stalemate. A doji at the top of an uptrend may warn of a potential reversal, while a doji at the bottom of a downtrend can signal a shift in momentum. Then we have the hammer and hanging man, small-bodied candles with long lower shadows. A hammer at a support level suggests buyers are regaining control, whereas a hanging man at resistance signals sellers might take over. Engulfing patterns are another classic example, a small bearish candle followed by a larger bullish candle. The market is telling you that sentiment is changing, and it's your cue to act. Trend analysis is foundational. Uptrends feature higher highs and higher lows, signaling sustained buying interest. Downtrends show lower highs and lower lows, highlighting persistent selling pressure. Recognizing trends allows you to trade with the market, not against it, increasing your probability of success. Sideways markets, often referred to as consolidation, may appear frustrating, but they offer opportunities as well. Breakouts from these ranges can produce explosive moves when they align with other price action signals. Let's bring this to life with a real-world case study. Meet Alex, an experienced currency trader specializing in major pairs like euro to US dollar. Alex monitors daily charts using price action. Recently, euro to US dollar was in a downtrend, lower highs and lower lows were forming consistently. He identified support at 1.1 and resistance at 1.12. At the support level, a bullish engulfing pattern emerged, a textbook signal that buyers were gaining strength. Alex didn't rush in. He waited for confirmation, a break above the engulfing candle's high at 1.105. He placed a stop loss below the support at 1.095 and set a take profit near 1.12. The market moved exactly as anticipated, and he captured a 150 pip gain. This case illustrates the power of price action: clear signals, disciplined execution, and well-managed risk. But let's expand this scenario. What if Alex were an intraday trader instead of a swing trader? In that case, he'd look at shorter timeframes, 15-minute or 1-hour charts, but the principles remain the same. Support and resistance levels become micro levels, candlestick patterns still reveal sentiment shifts, and trend identification helps him align with the dominant intraday flow. Volume can be integrated here as a supplementary tool. Rising volume with a breakout candle can confirm the strength of the move. Price action is not confined to Forex. Stocks, commodities, cryptocurrencies, they all respond to the same market psychology. For example, during the 2021 GameStop rally, observing price action alone would have allowed traders to see the formation of parabolic moves, micro supports, and resistance levels, even before the frenzy made headlines. Skilled traders could have entered on pullbacks, managed risk with tight stops, and taken profits near key resistance levels, all by reading price movement rather than relying on external news. Now let's talk about psychology. Understanding price action is not just about reading charts, it's about managing your own behavior. One of the most common mistakes traders make is overreacting to price noise, small fluctuations that have no real significance. Price action teaches patience and discipline. It shows you where high probability setups are forming, and more importantly, it teaches you to wait for confirmation before committing capital. Remember, trading is a game of probabilities, not certainties. Another powerful concept is confluence, when multiple price action signals align. For instance, if you identify a support level, a bullish engulfing pattern, and the market is forming a higher low, the probability of a successful trade increases significantly. Confluence is your edge, it's how you separate random noise from actionable setups. Here's a practical exercise for you traders. For the next week, pick one market you trade regularly. Observe the charts without indicators. Identify key support and resistance levels. Track candlestick patterns like dojis, hammers, and engulfing candles. Map trends and mark potential chart patterns. Document your observations in a trading journal. At the end of the week, review your notes. Which setups led to profitable outcomes? Which ones failed, and why? Then share your findings in the comments below. Engaging with the community this way will sharpen your skills and give you insights you might have missed on your own. Let me leave you with this, as Al Brooks, one of the pioneers of price action trading, famously said, "Price action is the purest form of trading because it is what actually happens in the market." No lag, no assumptions, just raw, actionable market behavior. Mastering price action doesn't happen overnight, but with consistent practice, discipline, and reflection, it becomes your lens into the market's inner workings. So here's my question to you: which price action patterns have consistently given you the highest probability setups in your trading? Do you rely more on trend-following signals or reversal patterns? Drop your answers in the comments. I want to hear about your experiences in real markets, not just theory. Your insights could spark a discussion that helps everyone here refine their approach. Remember, price action is more than just a strategy, it's a mindset. Treat each chart as a story, each candle as a sentence, and every trend as a chapter. The better you become at reading this story, the more confident, precise, and profitable your trading will become.
Thank you for listening to the 101 Trading Tips in the Ultimate Trading Podcast, brought to you by bellsforex.com AudioWorks. We hope this episode gave you insights, perspective, and practical ideas to strengthen your trading mindset and improve your decision-making. Stay disciplined, keep learning, and remember, every trade is a step toward building your edge. If you found value in today's episode, don't forget to like, subscribe, and turn on notifications. Sharing the podcast with fellow traders helps us grow and bring even more free trading education to the community. Visit us anytime at bellsforex.com for resources, guides, and tools to support your trading journey. Until next time, trade smart, stay disciplined, and keep building your edge. Happy trading!